Good morning, everyone. It's Friday, June the 5th, and welcome to 7 Investing Live. This is our live stream show we feature every Monday, Wednesday, and Friday, where we focus on an intriguing and innovative part of the stock market and even some individual investment ideas. My name is Simon Erickson, founder and CEO of 7 Investing. I'm joined by our executive producer, Heather Horton. Heather, today we are going to look at the cybersecurity industry, one that is very important, especially as there's more and more attackers using more and more creative AI-powered techniques of breaching data silos. But we're going to look at two companies in this space that have been around for quite some time. We're going to look at CrowdStrike and we're going to look at Zscaler. And we both got recent results from both of these companies. We're going to take a look at both of those and then also size them up as investment opportunities. Before we jump in, though, Heather, this has been a market that's been around quite some time now. I know that you and I have both invested in cybersecurity. We love the land and expand model here. You tend to go in there, you've got a solution that works, and then you grow that over time. You get more and more modules. But this is enterprise software at its core. You want to be as deeply embedded as you possibly can so you can keep getting those subscription revenues over long periods of time.
I've been investing in cybersecurity since the FireEye era. May that rest in peace.
I remember that one. Oh, yeah.
Yeah, definitely really interested in both these companies. So I'm excited about today's conversation.
It is neat. It is neat to see kind of how this has changed, right? It used to be you'd have the Norton antivirus. You put the CD-ROM into your computer, it'd look for the signatures that it recognized, and then, if you had one of those, it'd clean up the malware, and then you'd be fine. Then we got into the digital age, the internet, and there was constantly evolving signatures. And like you mentioned, FireEye tried to keep up with that. Had to try to go out there and detect and attack as soon as you possibly could. Update your cloud-based cybersecurity software to recognize those signatures and then protect everyone else who is a current customer to do the exact same thing. And now we've even evolved further into some of the things that we'll be talking about here today, endpoint security and zero trust, as we're talking about the solutions that CrowdStrike and that Zscaler have created. So we're going to look into those in just a minute. Let's jump in first to CrowdStrike. We got CrowdStrike's first quarter results here very recently. First quarter 2027 for their fiscal year. We've got the CrowdStrike first quarter as a glance, right? So this is ending annual recurring revenues, right? This is a popular metric to look at for cybersecurity because it's not just all about one quarter or one quarter's bookings or one quarter's revenue. It's like if you're looking at annual contracts, what is your recurring revenue from those annual contracts you're going to get? And then how are you growing that over time? And you can see CrowdStrike really, really good top line growth. Even a company of this kind of size that's doing $5.5 billion of annual recurring revenue every year, still growing that at 24% year over year. And then the net new ARR, new logos, new customers, new additions of products that you've added on that you're not just continuing that you were previously using, up 32%. Well, that's really, really good, right? So you're growing faster than your existing revenues are growing, a good sign as well. And look at CrowdStrike, how efficiently this is falling to the bottom line. Operating income up 62% off of 24% ARR growth. We've got a free cash flow margin that is now 34% of the business. The company also flipped to positive GAAP earnings per share. Net income was $28 million. And so that's a nice, whenever you're looking at GAAP earnings, normally we don't look at that as closely for companies like these, but it is always nice when you're looking at the bots and how these things get picked up in screens. You've now got a positive GAAP net income company. And then, of course, these were record operating cash flows. It was a 42% operating cash flow margin and then a 34% free cash flow margin as well. We also got a stock split. We've got a 4-for-1 forward stock split coming up here at the end of June for any CrowdStrike shareholders. Keep in mind that if you see the shares that are significantly lower than where you remembered them being before, that's because they are doing a 4-for-1 split right now. And of course, there's plenty of structural demand out there. Some of them that management mentioned on the call was that AI detection and response solutions were growing by over 250% year over year. And then also the company's Falcon Flex platform was up 99% year over year. I'll talk about Flex in a moment here. Let's actually go ahead and first look at the comparable results from Zscaler. There's what we saw for CrowdStrike. This is now the ones in blue are the ones that Zscaler just reported. Right. And so Zscaler, this is not their first quarter results. This is their third quarter 2026 results. But again, you see a lot of the same kind of metrics, or at least similar in nature, right? And similar in magnitude. 25% revenue growth top line, very strong in the Americas and Asia Pacific. Also a 23% operating margin, a 16% free cash flow margin. You also see that bookings that's up 60% quarter over quarter, over 600% year over year when you look at the Z Flex bookings here in Q3 for Zscaler. And of course, very, very good annual recurring revenue. Again, 25% year over year. You can see there's still $6.5 billion of remaining performance obligations, which is future contracts, future subscription revenues that are already booked. So these flex bookings, this was something that kind of stood out for both CrowdStrike and for Zscaler. We saw 99% growth year over year for CrowdStrike in Falcon Flex, and then we saw really over 600% year over year growth for the Z Flex bookings. And so you say, well, what the heck is that? What do you mean by flexible bookings? These companies have got all these different modules. This is land and expand world, like we just said. You might go in with CrowdStrike initially to get endpoint protection, and then realize there are any of the other 24 modules that they offer, 25 in all, that you might want to add on over time, right? Maybe you want to have zero trust security. Maybe you want to have endpoint security. Maybe you want to have network security, whatever it is. There's a lot of different cybersecurity protections that you could have. They're all slightly different in nature, but companies that are large, like CrowdStrike is, can offer all of them. And customers are saying in recent years here, I like this. I like that you're offering these. I like the discount you're giving me if I bundle more products together here, which both of these companies are bundling and giving discounts if you use more than one module. But even better than that, I would like to be able to switch later on. If I'm using a lot of endpoint today and I want to switch that to zero trust next year, I don't want to be locked into this contract. I want you to give me the pricing for it, but I don't really want to be locked in. And so both of these companies have said, yeah, we're going to call that flexible pricing. We're going to call that flexible subscription revenue, where if you pay us up front for the subscriptions, for the number of modules that you want, we're not going to be able to let you cut modules where you just all of a sudden don't want to use all of them or use more of them. But we are going to let you adjust if you find that your needs are changing, right? You want to switch from 6 modules that you've got today. We're not going to make you keep those same 6 a year from now. You can switch to 6 different modules or however you want to mix and match them over time. That's what this flexible bookings is. That's what these flexible revenues you're seeing, whether it's Falcon Flex for CrowdStrike or Z Flex for Zscaler. That's what that refers to. So let's put that right back up again if we could, Heather. The one, first of all, let's look at CrowdStrike's. Yep, here's the flexible accelerating platform adoption. You see that's now $2 billion of the $5.5 billion of ARR. That's up 99% year over year. That 26% at the back, the average reflex uplift, that means 26% of CrowdStrike's customers are renewing early based on the flexible credits. CrowdStrike doesn't have to go to them and say, hey, your contract's almost up, we're ready to renew you. They are proactively, 26% of the time, going up and saying, hey, we're going to refill our balance. We're putting our piggy bank back up to full again because we like this platform, we want to use it, and we like this flexible program you've got. So really, really good. Here's the ones for CrowdStrike. Let's look at the ones for Zscaler. Similarly, very, very good for their own flexible bookings. You see there it is, 60% up year or quarter over quarter, 600% year over year. And look at this. From third quarter 2025, the flexible bookings, when this was kind of still relatively new, was $65 million. Look at the bump now over, like I said, over 6x, really over 7x, up to $480 million now in their third quarter of 2026. So this is something that's kind of been changing for a lot of these vendors that offer multiple modules. Again, CrowdStrike has got 8 distinct product lines and 25 total modules. They kind of started with endpoint, endpoint security for devices, especially popular in COVID when everyone was working remotely. You wanted protection from the nasty stuff that was going out there on the internet. That's kind of how they got their name, and they landed and expanded over that. Zscaler had a slightly different offering. Their most popular was the Zscaler Internet Access Platform, the ZIA, if you want to call it that. This was kind of, they were looking at kind of what was going on all the way out there on the internet, protecting applications at the higher level and making sure that none of that nasty stuff got into your networks or your applications that you were protecting as well. So Zscaler kind of really has 3 platforms, at least in its core product lines. CrowdStrike has got 8. CrowdStrike is a much larger company than Zscaler is, but these are both trying to land and expand over time. Let's move on. Now that we kind of understand the business, let's look at where should we go next. I think we're going to go to the valuation multiples. Let's look at these as investment ideas. Let's start with CrowdStrike, who's been doing very, very well at converting those cash flows from their revenues. Because it's such a consolidated platform and customers are already growing at scale, and you've got the majority of customers, 51% of customers have got at least 6 modules, and 25% of customers have got at least 8 modules that they're paying for. So, of course, when you've got that kind of adoption and that kind of scale already, you're converting a lot of that into free cash flow margin. And that's why CrowdStrike just here recently has got already, what did we say, 34% free cash flow margin here for the most recent quarter. However, this is a very expensive stock. CrowdStrike stock itself has been on fire. During just year to date in 2026, CrowdStrike is up 53% versus an 11% increase for the S&P 500. And during the last 12 months, CrowdStrike's up 56%, which is double the 28% of the S&P 500. And a lot of this is due not only to great results, as we've been seeing, but also an expansion of those valuation multiples. Look back in time, a year ago, if we were looking at CrowdStrike's price to sales ratio last summer, CrowdStrike was selling back then at 27 times price to sales a year ago. And now it's at 36 times sales today. And price to free cash flow a year ago, 112 times, 128 times today. Those are expensive multiples for an investor to get a new position in. This is a company whose stock is priced at a premium. It's got great execution. It's doing fantastic. But keep in mind, you're paying for a very expensive stock if you're paying 128 times free cash flow for a business that's already at scale doing billions of dollars of revenues. But I think that we're going to be doing okay with a business like this over the long term. I don't hesitate to stay away from a stock like this because it's executing so darn well. We saw it increase its annual recurring revenues. We saw it increasing its guidance for the full year for annual recurring revenue, for its operating income, and even its own free cash flows. All of those at increased guidance here for this fiscal year. And over time, we're already at 34% free cash flow margin. That's really good, but they've kind of got a long-term target of getting to 36, 38% margin for free cash flow. Again, a business that can grow that top line at 25, 30%, even lower than that, and churn out plenty of cash for investors. And, other than some acquisitions here and there, it's not really having a whole lot of reinvestment needs within this business other than launching new modules and R&D up front. Let's look on the opposite side of this. Let's look at Zscaler's multiples. Almost a completely different story when you're looking at this one. CrowdStrike, expensive stock getting even more expensive. Zscaler getting less expensive and much more affordable now here today. Year to date, 2026, Zscaler's 40% decline. Year to date in 2026, and over the last 12 months, down 54%. That is badly trailing the S&P's 11% return year to date and 28% return over the last 12 months. And interestingly, the company's short interest, which is the percentage of publicly available shares that are traded by short sellers betting against the stock, betting on the stock price to go down, the short interest has been spiking from 5.5% at the end of last year, now to 10.7% in June 2026. So this is interesting that the multiples are contracting so significantly, right? Look at this price to sales ratio, the green line, if you're following along with us live here. This has fallen from 18x, 18 times sales a year ago, to just 7x here today. And price to free cash flow has declined from 65x to 24x here within the last 12 months. That is even with that 25% top line growth, the new product lines that have been introduced, and plenty of cash flow that you've seen being generated out there. Why is that? Why is Zscaler kind of out of favor right now with investors while CrowdStrike is just so popular? One of the reasons that they had was kind of very conservative guidance, not only for the rest of fiscal 2026, but also for the going into 2027 as well. And one of the reasons for this was it was an acquisition that Zscaler made a couple of years ago called Red Canary. Red Canary was going to be cybersecurity protection for AI agents, right? AI agents that were out there working autonomously, a favorite for hackers and those who want to steal data. They want to go after the agents out there. You need to have protection for those things, just like for your core platforms and your core data centers. This is why Zscaler acquired Red Canary. And they went out there in the most recent quarter and they said, hey, we've traditionally seen net retention rates of 115% for our traditional product lines. That is existing customers paying 15% more in most years compared to the previous year. They're upselling, they're adding more products. And we're just not so sure if Red Canary is going to grow quite as impressively as the rest of our business. In fact, their exact words were they're expecting Red Canary's net new annual recurring revenue should grow at a slower rate than the overall business in 2027. And so that's why they went out there and they said 2027 growth rate, keeping in mind we're still in fiscal 2026, is more than a year out that they're given a forecast here, but they're thinking only 15 to 16% growth in 2027. Stock market freaks out, doesn't like to see the uncertainty, says, hey, we wanted to see 25, 30% growth, not 15 or 16% growth. The stock sells off accordingly. I do not worry about this, Heather. I think that this is just another case of Zscaler being very conservative. This is a company that just every single quarter they go out there, they issue conservative guidance, and then they beat that guidance. Seems like they sandbag all the time, right? And you like a company to do that. You don't want the opposite, where a company's going out there and putting the bar here, and then they only come out here. You always want to have a very low conservative forecast that you exceed quarter after quarter after quarter. And that's exactly what we've gotten used to doing with Zscaler. Worth pointing out too that Red Canary is exceeding their internal expectations. They just increased their full year annual recurring revenue expectations from this acquisition from $130 million to $137 million. And they also raised their full year revenue guidance from $125 million to $136 million. So combination of company that tends to be very conservative, on top of that is already exceeding its internal expectations of its most recent acquisition, and then is issuing guidance more than a year out saying, hey, this is what we're seeing, just a heads up, so you can get ahead of this in advance. I don't think this is a really justified sell-off, especially for a company that's got so many flex bookings, has already got kind of 3 product lines that are doing really, really well out there. I think Zscaler, to me, if we're comparing these two businesses, knowing the multiples we're looking at, knowing the top line growth we're seeing, knowing that they're very free cash flow generative, and that there's just a little bit of uncertainty in what's coming up next, I think I'm okay with that. And I think that out of these two, if I was buying one of these two today, I would be more intrigued by Zscaler over CrowdStrike as an investment opportunity.
It's funny, I own CrowdStrike, but I don't own Zscaler, which maybe I will change. I'm throwing these numbers back up again. They're just very good. You kind of answered my question. Is this a situation though where maybe you would just want both in your portfolio, or do you think this is too niche to have too much weight into?
I think it's very smart to have a cybersecurity basket just because, the nature of these businesses are so embedded. And even though they're kind of doing similar things with each other, they're not always direct competitors, at least for a lot of the product lines. I would certainly say CrowdStrike got its kind of core foundation in endpoint security. And then you kind of had zero trust was where Zscaler kind of became popular. If you find vendors you really like, you tend to use them, and then you replace the smaller vendors that can only do a couple of things with the bigger ones because you want to save your total cost of ownership. And so, in my opinion, both Zscaler and CrowdStrike are both firmly embedded in the enterprise. You see the customer count, you see the ARRs, you see everything is there. This is growth at scale. It's just that it's interesting to see, in my opinion, the stock prices doing very, very different things. Right, the fundamentals are both there. There's a lot more hesitation for Zscaler than there is for CrowdStrike today.
And I mean, is conservative guidance something? I mean, it sounds like that's something they do quite often, that's how they tend to go. And so is that just something you need to understand about the stock as that you go forward with it, that they'll be conservative
Yeah, they do need to convert a little bit more of that revenue into free cash flow. You saw CrowdStrike did it so well, right? CrowdStrike is just already so large. There it is, the 34% free cash flow margin already for CrowdStrike. We didn't see that with Zscaler here. In fact, year over year, that 25% revenue growth, there you go, perfect for Zscaler, the top left. When you look at the free cash flow, not only the margins is lower, 16% versus 34%, but they also only grew free cash flow 8% year over year off of 25% revenue growth. That means you're getting the bookings, but you're not collecting the money just yet for these flexible credits. Probably not an issue. That's a working capital thing. That's just, are you able to collect on them for future bookings that you've got and current revenues that you've got? Probably yes. But if this is something that we start seeing this for 2 quarters, 3 quarters, 4 quarters, they're just not getting the cash from the customer commitments they've got. Is that because they're canceling those bookings? Is that because they don't want to use those products anymore? We don't know yet, but something to keep an eye on. Not concerning right now, but possibly an issue going forward.
Perfect. It's interesting they're both doing the flexible booking system. That seems really smart in a space that's moving so quickly to keep customers without locking them into specific products that might just be completely obsolete in no time.
It's crazy out there right now. Just the attacks are AI generated attacks, and anyone who runs a website knows what this is like. It stinks. You have to have cybersecurity protection. You're not going to drop a deeply embedded vendor just because they get more expensive. You're going to stick with them the whole time. You kind of have to, but because everything's changing so quickly, like you said, these flexible credits is like, okay, you want to change modules without paying more? Now you can do that.
That seems like a really good business move. Anything in particular you're watching going forward with both of these companies or in this
It's just
space?
yeah, interesting. You see kind of like Sentinel One, a couple years ago comes out with their own endpoint protection. You kind of see these kind of like one-off product lines from companies that sound like they're doing something completely different, completely better than what anybody else has thought of before. I don't think that's true. I think that this is code, this is software code that the big guys tend to learn how to do pretty well, even if there's something new that comes out. Um, I think this is still a winner take most market, and so I would prefer in cybersecurity if I'm putting my capital to work and my investment dollars to work, I want the big guys that are going to be able to keep, deeply embedded and evolve as the whole world changes out there.
Same. This is such a fascinating space that just keeps moving.
Do you have thoughts on this, Heather? I know that you've got a good background in cybersecurity and have looked at lots of these companies for more than a decade. Thoughts on CrowdStrike or Zscaler or anything else going on out there?
I haven't used either of them as an end user, which I would love to talk to more people who have. Um, I yes, I've been deeply embedded in cybersecurity. I grew up in a family with IT professionals, and I just find it so interesting that what these companies are doing is exactly on paper the same thing they've been doing forever, is keeping your, network safe. But how fast that space is changing, like we said, with the AI attacks now, and how you're just having to like exponentially grow what you're doing. And it's been really fascinating for me watching these companies grow and try to stay ahead, because every day there's more growth, more development if you want to stay ahead of the hackers. And yeah, I find this space incredibly fascinating, and I do want to talk to more people who use them as actual end users.
Yeah, it's been so interesting to see the evolution of it, because you and I have been talking about this, I know, for more than a decade, kind of early
Mhm.
on as this was still becoming a thing and people started talking about cybersecurity. It was big contracts with the government, who was winning the biggest deals, and then those companies became really, really popular. And then it was the big tech companies, the Googles and everybody else that was either developing it internally or these big contracts that were commercial. And then it was kind of like bleeding down to the mass market, right? The smaller companies that might not have had as big of a win up front, but they were still growing their businesses really quickly. And now all of a sudden you see the scale of these companies and they're serving, thousands, hundreds of thousands of customers and endpoints that are out there, and they're growing those still at 25% a year. It just shows you not only how big this industry is, but how complex it's getting. And when you look at the investor presentations, too, they're saying it's going to double again by the year 2030. That's only 4 years out, so it's still going to be double-digit compound annual growth rates. Very complex that we as investors tend to oversimplify sometimes and say, oh, yeah, look, annual recurring revenue looks good. Oh, free cash flow looks good. And by the way, there's a million things going on behind the scenes that we don't look at as closely as those guys that are operating the business do.
One thing, especially with CrowdStrike, that we've seen, and I think it's just a problem in this space, is if there is a security breach or a hack that gets publicized, the stock will take a hit. And so I think you have to mentally be prepared in this space to watch that happen and think, oh, maybe I should buy in more, because it's one out of, hundreds of thousands, if not millions of, you know, instances. Generally, they're not that big of a deal. I mean, they're horrible, but it's just something you need to be comfortable with, watching a stock take a bit of a plunge and not panic selling, because I think if you're a panic seller, this is not a space to be in.
100% agree. And, kind of traditionally, what we've gotten used to seeing in cybersecurity industry at large is 20 times sales and call it 50 or 60 times free cash flow, right? So, with that in context, Zscaler is selling very cheaply right now, or at least much lower than those traditional multiples. And CrowdStrike is selling far above at a very, very high premium to those kind of multiples. like you said, if there's an instance or there's something that happens that gets a narrative built around it, and all of a sudden people don't want to pay that kind of premium, that might be the more of the buying opportunity than going out there and paying 128 times free cash flow today.
Yeah, I'm excited to watch both these stocks. I do love this space.
Yeah, fantastic. Okay, so that's the show here for Friday, June the 5th. We took a look at cybersecurity. I'm pretty excited about next week because on Wednesday we're going to be bringing the crew from Chip Stock Investor in to talk about China and whether China is going to be able to get away from these export controls on lithography and ASML's equipment. We've seen some stories lately about this. Um, we've referred to it as why sell the sourdough making kit when you can just sell the sourdough itself. Is China be able to bypass a lot of the traditional chip making methods that we've gotten used to for more than 6 decades? We're going to talk about that a little bit, and then also kind of how far can this AI demand really go with all the cutting edge chips out there? It's going to be interesting to talk with Nick and Casey next Wednesday, and then we're going to be bringing in the Chit Chat Stocks guys here for our upcoming program as well. So. Probably going to take off on Monday, but we'll see you again on Wednesday. In the meantime, I hope you have a wonderful day and I hope you have a wonderful weekend. We'll see you again next week.